How's it going? I'm Ryan, and today I'm going to go over the one trade that I took on NQ. Took a long position for a decent win today. Had another trade that I tried to get into that would have been a much nicer move, but missed out on the entry. So I'll go over both of those, what I was looking for. But before I get into the trades, let's take a look at some of the levels I was watching. If you watched yesterday's video, you will be aware of what these lines here are, these levels. The orange are value area high and low. The yellow is the point of control. And these levels come from the overnight session. So from yesterday's close to today's open, this represents the value area, the point of control, value area high, value area low. The blue levels are all derived from the point of control of 8-hour candles. So you can see like this level here. There's a level above from previous price action. We have this level here from 8-hour candle point of control here as well. And what that's looking at is the price at which the most volume transacted in that 8-hour period. So I use those levels as kind of magnets because it's an indication of liquidity. And I want to see where liquidity lies and use that as targets for entries, exits, etc. Because I figure that price is attracted to liquidity. Liquidity is needed to make price move, etc., etc. So kind of use it to your advantage. And today I'll break down this. I use the 8-hour to get my levels, but I also use the 5 and the 15 minute to get levels intraday, or just confidence on where to place targets, stop losses, entries, etc. So those blue levels are from the 8-hour. The orange and yellow levels are from the value area of the overnight session. The green level is yesterday's high a day. And that's really all that came into play. So what was I watching? We were opening within the value area, so I was watching any sort of price reaction to that. I didn't really have a bias. We started breaking to the downside. At this point, I was thinking we were weak on the day, and I was maybe looking for a potential lower high to enter short. My thought on this was to target the value area low. So we break out of that range, come up and retest it, and then continue down. Also in the first 15-minute candle of the day, that was the point of control for that candle. So we know that there's a lot of volume being transacted in this area. Funny enough, it was also pretty much the point of control for the following 15-minute candle. But it blew right through it, right? So I was watching for a retest. What I'm looking for an entry is some sort of confirmation with a 5-minute candle close of whatever I'm looking for. So if I'm looking for a lower high at a specific level, I want to see the 5-minute candle test that level, fail to close above it, look weak, etc. to give me confirmation. We didn't get that, right? The candle was strong, closed above that level. We're no longer looking for a short entry here. Price then explodes upwards, creating fair value gaps along the way, right? I don't really trade fair value gaps per se, but there is some relevance, and there is obvious, when you get fair value gaps, you create big moves to the upside or downside regardless. So it shows strength or weakness, whichever way you're looking at it. But we make a big move up. Next thing I'm looking at, right, we break above high a day. We break above that like pre-market swing high there. I guess we close kind of right at it. We come down, and the next thing that I'm watching is a retest and hold of the value area high or potential point of control. We kind of land right in the middle of those two. And if I'm looking at this, was there any indication on the 5-minute? Not really, right? So there wasn't a whole lot to take here. I was looking for either price to pull back to the value area high or the point of control. We didn't get either of those. We kind of landed right in the middle. Kind of retested that previous high a day. From there, we get another big move to the upside, new high a day. We get this 5-minute candle here. And one thing I'll say is on this following candle, this big move higher, that set a new high on day. If you look at the point of control, it's at the value area high. But it's also, if you look at where it is relative to price, it's very low in the candle. So it's kind of in the lower third of the candle. That tells me with the most volume being down here and price pushing all the way up here, that tells me that there's a lot of buying power here, right? So that's kind of a good way that you can also add in a layer of confidence into your trading is to see, you know, the majority of the volume is down at the bottom of the candle ripped to the upside. That's a good sign that it was a lot of buying pressure keeping it up, and it broke all-time high, or not all-time high, it broke the daily high. So a lot of bullish signals there. So at this point, I'm looking to go long. We get this hammer candle on pretty low volume. Not a whole lot to think about there. But one thing is that we have kind of these point of controls here on the 5 minute. It tested that and held pretty well, which is a good sign, because once again, those are areas of liquidity. If price comes down into that area, and that's buying liquidity, it should move up. If it's, you know, a lot of people selling, then it should move down. The fact that price tested it and closed green, closed a hammer, that tells me that there's buying happening in these areas, right? It's buying pressure a lot more so than selling. So the following candle, I wanted to see a test of this level right here, 367. That was my entry. My target was previous day's high, so about 416. It's about a 50-point move, and I missed the entry by 1 point. So the bottom of that candle is about 69, 68. My entry was 67. I put a limit order. I just clicked on the 1 minute, or yeah, I used the 1 minute for entries. Put my limit order, and it was right at that point of control on the 5 minute. I just wanted to see price test it and move up to the upside, and it did not. And one reason that I felt good about this move higher, and I'll show here, is that we're looking at the previous couple of days and after hours here, right? And the one thing that you can notice is look for these yellow lines. That indicates the point of control. That indicates a lot of volume in that area. Once we had broken above kind of this area in here, if you look, there's not a lot of volume in these bid-ask volume candles, right? The width of these candles is pretty narrow, indicating not a lot of buying and selling. Here it's non-existent. Here's pretty thin. Here's pretty thin. Here's pretty thin. Over here it's pretty thin until you get up here. So I figured if we broke out with strong price action up into this low volume area, there's not a lot to stop us, right? And where would price want to move in order to get liquidity is probably up to this next, these next high volume nodes. So price moves to liquidity, right? It wants liquidity. It's going to act as a magnet. So when we have price looking strong, we have breakouts, we're moving to the upside, and then we look on a higher time frame and realize that there's not a lot of liquidity between us and our next target. We expect price to move pretty smoothly, right? Because it wants to get to that liquidity in order for transactions to occur. And so that's kind of the background on why I wanted to see a bigger move up once we started to break out. Just missed that entry by 1 point, but I wanted to enter here, take it up to that high day. The trade that I did take was a long on this candle here. I took a long on this 5 minute candle, pretty much right at the end of it, and I targeted this level right here. This level right here is derived from the 8-hour bid-ask volume chart. It's a point of control, or a series of point of controls on the 8-hour chart, so it just represents liquidity, and that's why it was my target. You can see that price pulled up to this level before having any sort of kind of sideways action. Once it broke out of that level, we move up to the next, hold that as support, move up to the next. So you see how these liquidity levels act, right? You break out of this one, it heads to the next. It's support and resistance, but with kind of a reasoning behind it, or the context that it's not just price action, but also liquidity confirmed by volume. So let's get into this trade real quick. I'll go over it so we don't take this too long, but as I was mentioning on the 8-hour, you saw that low liquidity, right? When price moves fast through an area, there's kind of gaps, and there might be essentially what you would know is like a fair value gap when you're looking at the price action, right? Price moves fast in one direction. You kind of want to see, well, one thing that you might want to see for continuation is for price to pull back into those big fair value gaps, get that liquidity and continue to move in the direction that it originally moved. We have one here. So I missed this move, but what we did get is a nice gap, fair value gap, as we moved up to that liquidity level. And as price pulled down, what I wanted to see was I wanted to see it hold between 420, which was yesterday's high a day. I wanted to see it hold that level, as well as this 5 minute level right here, right at 400. 21,400. And the reason why is because it's right in the middle of that fair value gap. It's also the point at which the most volume occurred. And same thing that I was talking about earlier in the day, where you have a lot of volume happening lower in a candle when price is moving up. That tells me it's a lot of buying volume, right? Because we have confirmation in price action. We have volume down here, increase in volume as we break higher. We have that high volume point of control right here, kind of right at the bottom third of that candle. That tells me if that was all selling, I don't think price would have broken higher and had such an explosive move to the upside, right? So that tells me that that volume that is available right there is buying. It's buying pressure. So what I wanted to see is I want to see price come down into that 400 level. I wanted to see price, it moved up. It hit the liquidity up here. That was obviously some selling because price started to move down. And you see that on the 5-minute candle here. So this candle here, that was that high, all the liquidity is up at the top. And what happened? We wicked up, we couldn't close, and we started to sell off. It's the exact opposite of this candle here that had that strong close and the liquidity at the bottom of the candle. So I see this, I'm expecting a pullback. I want to see us hold yesterday's high, but I would really like to see us test this fair value gap and that liquidity right at 400. We did, we came down, we hit that level, we swept 400, we moved right back up, printed a hammer. I entered long. Right around 420. My stop loss was below this wick, so like 390 or so. That's about 20 points, a little less than 20 points risk. My target was here, which was 460. I had a first target at 30 points, the following target at 460. So that's about 42 point initial, 30 point initial target, 42 point runner target for profit. Had a little bit of a scare here, but the volume wasn't too concerning. And then price reclaimed that level really quick, moved up, hit both my targets, and that was it for me. So tried to enter along here, missed it by 1 point, was able to enter here after we got that sweep of that liquidity from this candle here, came and retraced into that fair value gap, however you want to look at it. This just gives me a little bit of an indication of where that volume is, and that it is buying volume as indicated by the reaction in price, right? So that's kind of the reason why I took it. That's the whole thing. That's exactly what I did. And this is just looking at liquidity levels for support and resistance, looking at price action in relation to that liquidity to determine buying or selling activity in the area, and just going with the trend, right? The trend was strong. We had an initial sell-off, but then it quickly recovered and started setting higher highs and higher lows. In that case, I don't want to fight the trend. I want to ride along with it. So that was the game plan. I feel like I'm seeing things a lot clearer as I'm using the market just opened and started dumping. As I'm starting to add in this context behind my trades. So I was always traded price action, volume, traded support and resistance. But now I added that kind of final piece, which is the volume profile or the point of control. It just gives me a bit more reasoning and understanding behind the moves that the market makes, and kind of helps me, I don't want to say predict, but yeah, sort of predict it, right? When I was watching in my live stream, you can even check, as price was pulling down, I said I wanted to see it hold 420 or come down and hit 400 and sweep the liquidity, and then hold 420, and that would be my entry. That's exactly what price did. Got my entry, got my target, and we're happy. Only took 2 contracts on the day, and we ended up with $150 profit, bringing us just under $500 profit on the account. We've taken 3 trades, all 3 days, or 3 trading days. All 3 days have been green. We had a 50-day day last week. We had a 300-day yesterday. We have a $150 day today. So price moved down. Where did it stop? Right at that level. It's beautiful to watch these things play out. I'm just happy to feel like I'm finding my groove. I don't want to get ahead of myself, but just building the confidence, following these levels, watching price action, being patient, waiting for setups, having price do what I expect it to do. Eventually we're going to scale this up. Like I said, only 2 contracts today, so the win was 150. Eventually I want to get up to 4 to 5, bump that up to, closer to $300 days would be great. $300 to $400 wins would be ideally where I want to go. But I'm in no rush. this is a funded account. I'm not paying monthly fees. All I'm looking for is to be profitable and get that payout so I can start funding some other accounts and start rolling this over and start scaling up. The biggest thing is building consistency, and I'm doing so with a smaller sizing and just looking to really get comfortable before I size up. But the size up is coming eventually. All right, that's all I got. Thank you for watching. I do stream live every day. I'll be out the rest of this week, but I'll be back for regular streams and recaps next week. Thank you so much. I hope you have a great rest of your day. Peace.